All right, so today I got my buddy Oggie on the show, and we're actually going to talk about a real interesting topic with rental property investing and why cash flow really doesn't matter at the end of the day, especially when you're starting your journey as a buy and hold investor. So, Oggie, before we get into that, like, how did you start buying rental properties? Because you've been doing real estate for a while, and a lot of people get stuck in this hamster wheel of flipping houses and being a broker. So, how did you really get smart and start, really focusing on buy and hold?
Getting smart. I
Yeah,
like that. And hey,
yeah,
thanks for having me first.
my
It's
pleasure.
always fun and talking to you and our conversation. I have a lot to learn from you too. So, but here I am, your guest, spilling the beans on how to get wealthy with buying rental properties.
Yes.
So I'm a real estate broker, got my license 2005, opened my brokerage 2010, started buying rental properties in 2016.
Okay.
And that time I borrowed money against my personal home, get line of credit, so I can start putting down payments. Then I figured out that the money that I had is not going to last very long. So I had to go and be more creative so I can acquire more properties and keep the same cash I have.
Sure.
And since then, I created that, and this, it's called Burr on steroids. How we,
I do
you
it
know,
now from you.
so as a yeah, Burr on
The
steroids.
burn on
So
steroids.
it's a very creative way how, with the Burr, the biggest problem is you buy the property, you create a lot of equity, and you put a down payment, but you have to wait 6 months to a year to get that cash out so you can
Yes.
buy another property.
Yes.
And after this month, by the way, Fannie and Freddie are changing their rules.
12. 12 months, right?
It's going to be 12 months, and cash out refi is going to be pretty expensive. So that was the problem. So I had to solve that issue to more property. So I came with the burn steroids where I could buy the properties and immediately next day I can refinance and get my money out and just get it going. So um, now after that, since I started buying rental properties, I started a property management company. So, I said, hey, if I'm going to have rental properties, why not just manage it myself?
Do it in
So I started
house. Yeah.
that. Yes. So that's having that experience. So a few years later, and you know this because I worked with you to train my acquisition guys, I started acquisition company buying properties directly in the state of Arizona, directly from homeowners, and also buying properties at a trustee sales too.
What is it? A
So
bank? It's a bank owned property, right? Trustee sales.
no. When the person starts making the payments,
Yeah.
the bank starts the foreclosure, and if they don't pay, it ends up in a trustee sale auction,
Okay. Got it.
foreclosure
Got it.
auction. So,
Okay.
and we go there live bid, and we pay the price, and we just get it. So that's where my experience comes out of personally handling. And I have a unique point of view of, I would say, like 360 degrees of the whole process, from acquisition to managing to um, being landlord and being a property manager at the same time. So that's why my experience comes. And I'd like to help other people like you get wealthy.
Which you've already done. We've already
Oh,
started the ball, buddy.
yep,
I got
yep.
two in the chamber. I mean, I've had properties before I started working with you, but you really opened my eyes up to the whole, burr on steroids. And, we're going to start. Oh, go ahead. Sorry.
But that's why we're talking today about why cash flow doesn't matter.
Yes. Why is
Because
that?
I don't know, it's just for the last 15, 20 years, I guess people just repeating the same thing that they've heard from other investors. Cash flow, cash flow. I want minimum $500 cash flow, things like that. So when you start understanding how we make money as an investor, as a buy and hold investor, and then you're going to figure out why that cash flow is not really important that much.
Wow.
So um, especially when you're starting in your first years of investing, you don't have too many rental properties. So my point of view is, in the first 5 rental properties that you have, you should not care about cash flow. But the only
Our
thing
podcast.
that you should care is building equity.
So
Your
forget
first,
about the cash flow, the first five, really concentrate on building equity.
the first five has to be the best deals that you've ever acquired with, 20, 25% equity or
Okay.
$50,000, $100,000 equity.
Each
So
property.
each property, because once you build the equity, that's going to 10x your buying strategy, because you can take the equity, combine it, and what I call it is creating a bank.
Interesting.
A bank, your own personal bank, that you have your equity, and you can tap into that money so you can start buying more properties.
Interesting. Interesting. So basically, and I like how you're talking about this now, because a lot of people, they will go and they'll drink the Kool-Aid and they'll buy a rental property and they'll look at the cash flow and they'll not get a good deal. And then they'll be stuck with not a lot of equity, making $600 a month, when really ultimately that's not going to really do much unless you have a bunch of properties. And they really just stunt their growth from being able to get more properties because there's not much they can do with the small equity they have. You know what I mean?
Exactly. So I always ask the people I talk to, what would you take if you have two options? I'll give you a property that has no equity but brings 5,000 cash flow per month. Or if I give you a free and clear property that brings it has 500,000 equity. Which of the two scenarios will bring more opportunities down the road for you?
The one with all the equity.
Exactly, because you have a free and clear property, you go to a bank and say, I have a free and clear property. You can open a line of credit, 100,000 for 350. Now we have 350,000 cash, almost like you can tap in at any single point.
It's like a credit card.
And the credit card, and you can buy good deals on a moment notice. You call me and say, hey, I have a great wholesale deal. You just look it up within 5 minutes. I can buy it. I can wire the money by the end of the day.
Yeah, it's such, you have so much more ability to buy these properties.
Yeah, and if you have $5,000 cash flow per month, man, great. That's a great living. But if you call me and say, I have this great deal, I was like, okay, let me call my mortgage guy. Let me see if I can get approved, and then I can buy it, within 30 days. And he was like, nah, I'll go with the guy with the 350 line of credit that can buy it immediately.
Close in a second. No bullshit.
Exactly.
Yeah. And $5,000 a month is only gonna, like, that can only really get you to a certain lifestyle. I mean, you know what I mean? Like, we're not in this business to make $5,000 a month. We're in this business to get wealthy,
Exactly, because so now it gets me to the point, like, you have to understand how, as a buy and hold investor, how we make money.
How do we do that?
So, all right. So we have 5 ways that we make money with every rental properties. So first one, very simple. Eventually the price of the property goes up.
Yeah.
Like, markets are up and down, 20% up, 15% down. But when you look at the span of 20 years, you have an average of 3 to 5% growth on your price. Yeah.
Not more. Some markets way more than that.
Second thing is, even if the price of the property doesn't go up that much, your mortgage is getting paid off.
Yes.
By the tenant. And that's the second thing. And the rent goes up. That's the third thing we make money off, because rents are usually related to the inflation in the country or the state. So you buy the property with locked mortgage for 30 years at $1,500 a month, and you rent it at $1,500 a month with zero cash flow, but the rent goes up with 3, 5, 8% per year because the inflation goes up. And 5 years later, your rent is $2,000 a month. So your cash flow continues to go up and up and up, but the mortgage payment is locked for 30 years.
That's the key, Dan. You just made such a good key, because that's where people get stalled. They say, oh, it doesn't cash flow right now. It makes $50 a month today, not tomorrow.
Exactly. So, and now is zero cash. But the fourth thing we make money is huge tax benefits. There's no other thing like real estate that give you so many benefits out of reducing your tax burden to the government, especially when you're considered real estate professional.
What does that mean if someone's not familiar with that? The real estate professional.
Real estate professional is you don't need to have a license. You just have to have, the rule is minimum 750 hours per year in real estate activity, and your main source of income to come from real estate. There's a lot of little things but that's the main point of view.
So if you're a fix and flipper full time, if you're a wholesaler full time, if you're a landlord full time, that's all
Yes.
real estate professional. If you're an agent
Yes.
full time.
Yes. And that allows you to take unlimited loss in real estate and you apply it to your ordinary income. And I'll explain a little later how it works.
Interesting.
So that's the fourth thing, unbelievable tax benefits with real estate. Here's the fifth thing, the bonus that nobody knows, nobody talks about. It's the inflation. Inflation is our hidden friend that helps us make more money. So this is how it works. We leverage all the properties. We never buy and hold with cash. We work with the banks to borrow as much as we can, reasonably, of course.
Yeah.
So if you borrow $1 million in the beginning of the year,
okay,
and the inflation in the country is 8%, at the end of the year, the $1 million are worth only $920,000.
Oh, because you get 80 off because of the inflation.
8% eats the $1 million.
Yeah.
So what we do is we borrow money today and pay it later on a cheaper dollar.
When you're paying the mortgage, you mean?
Yes, you pay the mortgage, pay off the loan. You just pay it down the road. You borrow $1 million, but the $1 million, their value goes down and down and down, and your income goes up and up and up. So you borrow it at current value, and you pay it at cheaper dollars.
No one talks about that, dude.
It's like getting paid to borrow money.
Literally. That's interesting.
That's what we do. Getting paid to borrow money. So these are the 5 ways we as a buy and hold investors make money. And if you take this very boring appreciation of 3 to 5 years, 3 to 5% a year, rent increase 3 to 5% a year. If you do just regular investing, 20% down payment, over the span of 20 years, your average return per year is between 40 and 60% return.
It's a home run.
Yes. There's no other investment that can give you 40 to 60% per year.
And that's if you're doing regular, like,
yes,
50% down payment rentals, not the stuff that you and I do.
Yes. If you follow us, or we do the burn on steroids, we're moving from 40 to 60% to 1,500% per year return.
Yeah, literally. It's crazy.
I'll repeat that. 1,500% return per year.
Yeah, it's crazy. It's crazy.
And then it's unlimited, like infinite return. That's what we call it.
Yeah. It's all house money. I call it getting a free house.
Yeah.
Sometimes you get paid to buy a house, right? It's crazy. So the cash flow thing, this is the big takeaway that I got. I've worked with you and obviously we're in touch a lot about this stuff. Like at the end, I'm just looking at this wasp right next to me. Oh, man, there's a wasp. Whoa, it's getting hot out here on the East Coast. So there was a wasp.
Tell me about it. 99 degrees in Phoenix in April.
Yeah, exactly. So the big thing that I got from you was if you can concentrate on just buying good properties with the equity and not letting the because I used to decline buying rentals because they didn't make enough cash flow. And once you kind of change my mindset on how to think about them, I don't necessarily care about cash flow. And then I went back and looked at the properties that I have now, and all that cash flow, it just goes right back into the account because I don't need it because I do enough business on, flipping properties. So the equity is what I'm going for now. So this new property that you actually helped me buy, it'll make on paper, maybe $300 a month but it doesn't matter because that's year 1, not year 10. You know what I mean?
But you also you have to say, how much cash have you put into the deal? 0, correct. And actually, did you get paid?
I did.
You got yourself an assignment fee, right?
Yeah, I did.
You paid yourself from your
Yeah,
own property.
yeah. I
Assignment
made
fee.
money. Yeah.
You don't put anything, it's going to cash flow. And how much equity you have in that property?
$80,000, $90,000,
Yeah,
something like that. Yeah.
yeah. So, but let's go back to the concept of why cash flow doesn't matter, and deals like this that you just mentioned matters. Because remember, we have the fourth thing that I said we make money is from taxes
Yes.
as a real estate professionals. So let me give you a scenario with negative cash flow, not even positive cash flow, negative cash flow. Let's say right now we're expecting a good year because seller will be distressed, recession. We're going to be able to find good deals.
Yeah.
But mortgage rates are high and you cannot cash flow, but you can find a good deals.
Yes.
So let's play the scenario that we go and bite the bullet with a negative cash flow because you have a good wholesaling business, go fix and flip. Cash flow doesn't matter. Or you have a good job, you make a lot of money, you can afford to lose $100-$200 a month.
Oh yeah.
So let's say you guy like you that has wholesale business has access to good deals
all day long.
So let's say I play this in my market where the value is a little higher. We're in the 300,000-400,000. Let's say this is a good real scenario for us in the rental market. Let's say you find a deal that the property doesn't need much work, just a lipstick, and it can be rented immediately. It can appraise for 400,000.
Okay.
And then, but you can buy it at 300,000.
Oh wow. Okay.
Yeah, let's say that's 25% equity. Easy.
Yeah. Right
no
off.
brainer. Yes, but if you get a mortgage for 300,000 at 6.5%, 7.5%, you're going to be negative cash flow probably $200.
Yeah. Sounds about
Everybody's going to say, fuck, no, I'm not going to do that. It doesn't make sense, right? But let's just humor me for a little bit. Let's play the game. You buy the property and you get negative cash flow, $200 a month.
Yes.
And then you go and every 3 months buy 4 deals like this one that you have $200 negative cash flow.
Okay.
But you get 4 properties. Each one has $400,000 of equity. At this point, you're going negative $800 negative cash flow per month. Correct?
Okay. Yeah.
But because you have a good job, you have good business.
Yeah, you're making
can afford.
money.
Yeah, you're okay for losing $800 a month. So now we've lost in negative cash flow for the year close to $12,000. No, $10,000. $800 a
loss.
Loss of negative cash flow. Huge problem. But now let's play the tax game. So every time we buy a property, each property becomes a business in the eyes of IRS. Once we have a business, IRS tells us that we have to depreciate the building of this business.
Correct.
So now we have a property that's worth 400,000. And we can we have to depreciate the building. The rule is you take the value of the property minus the value of the land, you get the value of the building, and divide that value by 27.5 years. So let's say for easy math, the property is worth 400, the land is 120 something, and the building is worth 275,000.
Divide that in 27.5 years.
Yes, so 300,000, 27.5 years, so you get about 10,000 a year. That's depreciation of the building. And on paper, IRS tells us this is a loss. So we have negative cash flow. we have a loss. So each property is losing $20,000 a year. So you have 4 properties. You take the 4 properties that lose $20,000 a year on paper. That's $80,000 loss
on properties with equity in them. Yeah, like these properties, they're losing money, but
let me just make sure that I'm not doing the numbers too much, so it's very realistic. If we have 10,000 negative cash flow, and in interest rates and taxes, and then you have depreciation, yeah, $20,000 per property on loss on paper.
Because the cash flow of the lost rent and then the depreciation. So yeah,
and
20%.
yes, also you have some repairs. Also you have some all the property taxes are deduction. All the interest you pay for the mortgage is deduction. All the closing costs for buying the properties are deduction. So $20,000 per property loss on paper. You have 4 properties. That's $80,000 loss on paper. But now, because we are real estate professionals, we can take that loss on paper and help us with take it towards our ordinary income on flipping or wholesaling properties.
So let's say, for example, somebody makes 500 grand a year flipping houses, right? That's their net income. Now their net, let's say their potential tax liability is $500,000, right? However, now if we take that $80,000 real estate loss, you just immediately take that and start whacking down your tax balance, correct?
It is. And so it's $80,000 of expense. But in order to calculate the real cash value of that expense is take the expense and divide it by your percentage bracket you're in. So let's say most wholesalers or self-employed people will be close to the 30% bracket.
Yes, for sure.
30% of your income you have to pay in the form of a tax.
Taxes, yeah.
So when you have $80,000 expense on a 30% bracket, you just take the expense divided by the 30% bracket, and you're going to see what's your real cash value that you're deducting your
taxes.
So 80,000 divided by 30%, that's 24,000
of cash tax savings.
Yes.
But you still own these properties. That's the key.
Yes.
And so, the cash flow, it just made you, that loss on the rental literally made you money in taxes.
Exactly. You lost 10,000 for the year on negative cash flow, but at the end, you brought 14,000 more in paying less taxes.
Paying taxes, and you have all the equity still.
Exactly. So the cash flow is just per month. At the end of the year, you actually make money.
Man.
So now, wait, we're not done yet. There's more.
There's more.
There's more. Now you have 4 properties, and you have $400,000 of equity.
Is it 100 each?
100 each.
Okay, 400 grand.
Negative cash flow, but at the end of the year, you offset your taxes. You actually ahead 14 grand.
Yeah.
Now, what you can do after only, like, let's say a year and a half to whatever, we have 100%. If you decide, let's say you sell the properties and even pay the capital gain tax in 15, 20%, you're going to end up probably with 300,000 cash in your pocket.
100 grand in tax liability.
Yeah, let's say we don't go in the details and being creative of saving taxes. Just go straight and sell it, pay the taxes. Now we get the $300,000 and we buy one property cash.
Okay.
And that property we rent it, and that property, again, you buy it below market. It's worth 400,000. You buy it at 300 cash with your own personal cash. Now, this property cash flows 2,000 a month because you don't have no mortgage, and you have 400,000 of equity at free and clear property.
And you can use that to be the bank.
Correct? And that becomes your bank. Now you go to local credit union, commercial bank, and say, I have this free and clear property, cash flows to 200,000 a month. Give me a line of credit against this property. They'll give you about 75% LTV. The property appraised to 400. They'll give you 300,000 line of credit. That is like a credit card that you can tap in at any single point. And now you start doing the same thing with your own cash. You don't have to use hard money. You don't have to ask for money. It's your own personal bank at a very reasonable rate, 5-6%. It doesn't have to be even hard money loan.
And you're just paying the money when you're borrowing it. So when you're not borrowing it, you're not liable for it. And you can, if you can find these good deals, which is what wholesalers and flippers know how to do.
Yeah, you're the banker.
You have full control over your wealth, basically.
Yeah, and now when we go deeper into the burn on steroids, when we start creating our hard money companies and entities to borrow against and high taxes and things like that, then it's exponential growth. It's just 10x. From this point on, it can buy unlimited rental properties.
Unlimited. And that's why I like how you use that example to like put a bow on everything on why cash flow doesn't matter, because the next time we do a show, we're going to deep dive the burr on steroids. And that's something, when you shared that with me, I'm going to like tease the listeners so that next month they listen to it.
Yeah.
When you shared that with me, I had like an epiphany and I was like, wow, that makes a lot of sense. But the first thing I wanted to cover was why cash flow doesn't matter, because most people read Rich Dad Poor Dad and they got to quit their job and they got to make $200 a month off a rental property. That's not how you do it.
Yeah, and then we got to do a show on the being bankable. That's the other thing.
That's another. That's
with the depreciation and all that you don't pay taxes, but you go to the bank and say, give me a loan, and they say, oh yeah, we'll give you a loan. How much do you want? If you pay zero taxes, but you're bankable, you can borrow as much as you want.
And there's a lot of value in that because you can do those rate and term refis like clockwork. So
yes,
we got a lot to cover in our podcast series. So
cash flow doesn't matter, man. Cash flow doesn't matter.
We just made that point clear, and we used a great example, and I'm glad we used the example to show people the the point that we were trying to make. So we're gonna do this mini series once a month. So next month we're gonna cover the burr on steroids. So before we get into that, if people want to check you out and learn from you, what is the best way for them to learn from you? What's your website called?
We have the burn on steroids. We have everything we put together in the Buy and Hold Academy, and that's the website's coming soon. The best way right now is to call me directly, and so either find me on Facebook or Instagram, Oggie Penev, or call me directly. My number is 602-405-8156. That's my cell, 602-405-8156. Call me directly, text me, I'll be happy to help you.
Beautiful. Yeah, Augie's he's the real deal. He I started work with him, and now like my whole mind has changed with like buying these rentals now, and
man,
already started getting the ball.
Give me a wholesaler that has a successful wholesale business. I'm gonna make them wealthy. They don't understand what they have, and what you had, it's very easy for me just to make you wealthy, really, really wealthy.
Yeah.
So
we just started with the first property last week. Well, I mean, I've had properties beforehand, but now we have this new one, another new one. I got another one I'm renting out. I got the tenant out. So it's just, the rental business is a great business if you really if you focus on it, right? So we'll make sure we have that in the show notes. I really appreciate you hopping on today. I'm looking forward to our interview we're going to do next month on the burr on steroids. And until then, I hope you have a great rest of your day, and we will talk soon.
Cool, man. All right. Thanks for having me.
Bye.